stock exchange. There's no money you can steal.
Really? And why are you people here?
Asset secured. A man gives you a fish you eat for a day. He teaches you how to fish, you eat forever. If you guys want to become a prolific, profitable trader, you know what to do. The stock market's been on a huge uptrend, but I got news for you guys. It's not going to always be like this. It's not going to always trend in the upward direction. It's not going to always be hot stocks and everybody buying and having a jolly good time. There's going to come a time where there's going to be some consolidation. There's going to come a time where there's an extended period of stocks trending in the downward direction. Nothing lasts forever. The stock market is like a season. And for you new traders, for you new investors, you have to understand this. Buying and buying and buying is good, but please do your due diligence. You have to figure out, what do you want? Are you investing for the long term, or are you trading? Are you swing trading? Are you day trading? What are you doing? What's your end goal? Before you invest, before you trade, before you do anything, before you take any advice, learn about what you're doing. How do I become a sustainable trader? How do I become a profitable trader? How do I become a trader that always wins? And in order for you to become that prolific, profitable trader, you have to learn the market. You have to do your research. You have to learn the basic fundamentals that are going to work moving forward, because everybody's winning now. But there's going to come a time when fundamentals are going to be back in play. There's going to come a time when you have to learn how to identify growth stocks. There's going to come a time when you need to read and analyze and back test the graphs and see where you can get in. There's going to come a time when you have to really understand how to trade earnings. There's going to come a time when you have to relearn everything that you thought you knew because you were making so much money for 2020. There's going to come a time where you actually have to know how to trade, actually know how to invest in order to generate a profitable investment, a profitable trade. What's a PE ratio? What are the criteria for that determines a growth stock? What does market capitalization mean in terms of me investing? Do I invest in a small cap company or a large cap company based on if I want to invest, or I'm swing trading, am I day trading this stock, or I'm going long on this stock? You have to understand and analyze and figure out what you're doing, because if you do not know what you're doing in the market, regardless of how much profits you made this year, you're gonna get burned. You're gonna get burned. And this is simply a matter of when. It's impossible for the market just to keep on going up and going up and going up. We understand the natural trajectory of the market is to ascend, which we understand, but not at this rate that it is. The stocks are overinflated. Everything in the market's overinflated, and at some point the bubble will burst. I'm not saying it's going to be a total crash, but I'm saying there has to be some form of consolidation. There has to be some form of normality back in the market, because what's going on right now is not sustainable, especially with the current economic standing. It's simply not sustainable. And to that I say today, in today's video, we're going to be dissecting the 11 sectors in the stock market, the industries within those sectors, and how we can use the information that we've gathered today in order to generate profitable, accurate leads in terms of investing and trading in the market. To help provide some context, what I'm trying to explain in this video, we're going to make reference to an article written by Rebecca Lake on January 24th, 2020. You can find this article on the Yahoo Finance page. Rebecca Lake wrote, and quote, "When building a portfolio, you may be interested in one or more specific market sectors. A sector is a slice of a stock market that represents a certain part of the economy or industry. Knowing how these sectors work can guide the selection of stocks, mutual funds, exchange traded funds, and other investments. While an investment advisor can provide a more in-depth look at the characteristics of their market sector, we're going to try to provide a rough guide per se in just how to look at the industries, what are in the specific industries, and just how we can use it to our advantage, right? In total, there are 11 sectors in the stock market, each with its own characteristics and features. Under each sector umbrella is a grouping of industries, which are represented by all the companies in that industry that trade on that stock market. Let's look at what the 11 sectors are and the number of industries they represent. Let's start with utilities. One of the main sectors, utilities, represents 5 industries. Real estate represents 2 industries. Materials represents 5 industries. Information technology, the behemoth of the stock market right now, this represents 6 industries. Industrial sector represents the most industry, which is 14 industries for industrial. Healthcare, which represents 6 industries. Financials, which represents 7 industries. Energy, which represents 2 industries. Consumer staples, which represents 6 industries. Consumer discretionary, which represents 11 industries. And communication services, last but not least, which represents 5 industries, right? Now that we know this, right? We know that there's 11 sectors and there's a certain amount of industries assigned to these sectors. Now, knowing this gives us a somewhat understand of how everything works, because if a company is a behemoth in a sector, this can affect the relative industries within that sector. For example, in the EV space, right? If Tesla does well, NIO tends to do well, or XPEL. Like they're all interconnected. Knowing this information, how does this help us? How does this help us moving forward? Well, then ask yourself, what sectors are being affected currently? What sectors are most affected by this pandemic? You have to be adaptable and just adapt to the situation and circumstance that presents itself. Market capitalization is the metrics that we use to analyze what are the biggest sectors compared to other smaller sectors. For those of you that don't know what market capitalization means, it's simply the total market value of all the company's outstanding shares of a stock. With the stock market sector, market capitalization is measured as the total value of all the companies across each industry included in a particular sector. Keep in mind though, guys, this is a fluid number, meaning it can change daily based on how a stock price of an individual company moves. But she wrote, it can still be a useful way of measuring which stock sector ranks as the biggest or smallest in terms of value. For example, here's how the stock market capitalization compared across all 11 sectors as of mid-January 2020. Communication services, $5.50 trillion. Consumer discretionary, $5.85 trillion. Consumer staples, $4.06 trillion. Energy, $3.25 trillion. Financials, $7.73 trillion. Healthcare, $6.26 trillion. Industrial, $4.58 trillion. Information technology, $9.58 trillion. Materials, $1.99 trillion. Real estate, $1.42 trillion. Utilities, $1.56 trillion. Based on the numbers, it's immediately clear. That information technology is the largest sector based on its market capitalization. Market capitalization is just a metric of just how much money is going to these sectors, how much the market caps of all the companies within that given sector, right? And if you take a more in-depth look at this sector, it covers 6 industries, including software, technology, hardware, semiconductors, and IT services. Its market capitalization is more than double that of an industry that has 14 industries. I guess, therefore, it's safe to say not because you have more means you have more. So that was IT services. Let's move on and look at financials. Financials is another sector that rates as one of the largest sector based on its market capitalization. Under financial umbrella, the biggest industry representation is banks. I guess a lot of you guys know that. Followed by capital markets and insurance. Healthcare, consumer discretionary, and communication services round out the top list of the largest market sectors ranked by market capitalization. Now, when deciding which sector to invest in, it's important to look beyond size and to consider how well one sector versus another performs. A simple way to measure this is in terms of how performance compares to the broader market as a whole. For example, you might compare one sector to the market using the benchmark like the S&P 500. The key here is looking at historical data. Historical performance of one sector compared to the benchmark. So for example, if you were looking at a 10-year of each sector compared to the S&P 500 for a period ending in January 2020, here's how the numbers would add up. Communication services, plus 76.58%. Consumer discretionary, plus 324.02%. Consumer staples, plus 136.13%. Energy, plus 1.56%. Financials, plus 154.81%. Healthcare, plus 224.66%. Industrial, plus 179.82%. Information technology, plus 357.78%. Materials, plus 87.38%. Real estate, plus 29.18%, a 3-year return on that one. Utilities, plus 114.00%. S&P 500, plus 191.97%. Ms. Lake went on and gave her argument more context where she says, if you're trying to decide which sector to invest in based on returns, then you might use a sector that outperforms the S&P 500 as a baseline, which is a great model to see which sector you'd like to invest in. So your list would include consumer discretionary, healthcare, and information technology, the top sectors of the market, right? There's a couple of points to keep in mind though. When investing by sector, first past history isn't an indicator of future performance. So just because a sector has done well up until now doesn't necessarily guarantee that it will deliver the same or higher level results or returns in the future. Like I said, things simply change. Nothing stays the same forever, and that's why adaptability is key in the market. Nothing stays the same. Not because something worked today, not because strategy worked today means moving forward is going to work in the future. Fundamentals was an integral part of the stock market setup, and if you look at all the trades today, there's no need for fundamentals. Everything is just ascending. Everything's just going up in value. You just need to pick a space or a sector or industry that's hot and just ride the wave. But not because something works today means moving forward it's gonna continue to work. But at some point there's gonna be normality. At some point there's gonna be a level of understanding that we have to learn the basics in order to excel, because the hot stocks, the hot wave, what happened this year doesn't, like I said, doesn't necessarily guarantee that it's going to be the same next year or the following year. So we have to learn the fundamentals moving forward. Another thing to keep in mind is that market sectors can be affected differently by market volatility and where the economy is in the business cycle. Financials and real estate, for example, may do better in the early stages of a business cycle versus the later stages. And you have to also keep in mind, especially like similar to what's going on right now, in a recessionary environment, consumer staples, utility companies, and healthcare may get a boost as consumers direct their spending towards basic living expenses and away from borrowing or discretionary spending. Keep in mind though, there's more than one way to add sector exposure to your portfolio. For example, you could pick a sector and buy individual stock that represents all of the industry that covers that sector. Or you could invest in a sector mutual fund, exchange traded fund, such as utility fund or a tech fund. Now you know about the sectors, you know about the industries, you know about the market capitalization, you've learned about scalability and to see how the sector performs when you're trying to invest compared to if you're trying to trade. You want to know, okay, I'm trying to invest, I'm trying to get in the market now and I want to play it safe. When deciding what sector you want to invest in, it's important to consider the basics, such as market capitalization and historical performance. You should also look at the risk when reviewing your returns. From there, you can analyze how likely a market sector is to help you properly diversify your portfolio and reach your investment goals. For example, how you could approach investment will differ based on whether you're chasing growth or you're looking for a long-term investment buy and hold options. In conclusion, finally, it's important to keep an eye on the market trends and economy as a whole. As mentioned, some sectors may be more in favor during certain periods of the business cycle than others. Getting to know how the market moves during various cycles can help when positioning your portfolio to capitalize on upward trends in certain sectors while minimizing impact of downward trends in other sectors. Guys, the bottom line is simply this. A sector represents a part of the stock market, and every sector has things that makes it unique, right? And from an investment standpoint, you have to consider, when you're doing your research, you have to consider how one sector may play off another sector and vice versa, and how you figuring this out can translate in terms of you generating returns on your investment. If you're investing in a sector fund or ETF, pay attention to expense ratio for each fund and balance that against earnings potential. In wrapping this up, I want you guys to understand something. Diversification is important here. For any good investment strategy, you have to diversify, right? And you definitely have to understand this. When you diversify across different sectors and industries, you're effectively spreading out your risk. If one sector underperforms, for example, that could be balanced out by a sector that suddenly takes off. Keeping diversification in mind is important when choosing mutual funds, since you don't want to make a mistake of ending up in a situation where you're overweighted with multiple funds from the same sector. In conclusion, you have to spread the wealth, you have to diversify, you have to be cautious, you have to think about your trades, you have to analyze each sector accordingly in terms of future-proof scalability, current performance, past performance, and just everything on a whole before you invest, before you execute a trade, before you sign on the dotted line. You have to do your research. And I hope this video was of value to you guys. If you liked it, if you enjoyed it, if it was of value to you guys, please share, like, subscribe. Until I see you guys again, asset secured.